Today, we're taking a closer look at Iris Energy, which trades under the ticker IREN. The stock had a strong day in the market, jumping 10.13% and closing at $41.98. That kind of move naturally raises a lot of questions from investors. What caused the surge? What does this company actually do? And after an incredible run over the past year, is the stock still a buy? Let's break it all down. First, let's talk about why IREN surged today. There were several catalysts behind the move. One of the biggest was the company's recent inclusion in the MSCI USA Index. When a company is added to a major index like this, it often triggers automatic buying from passive index funds and ETFs that track that index. Large institutional investors also tend to increase their exposure after inclusion, which can create strong short-term demand for the stock. Another major catalyst was the company's aggressive expansion into AI infrastructure. IREN recently announced plans to purchase 50,000 new GPUs from Nvidia, specifically the next generation B300 and Blackwell-class chips. These GPUs are designed for large-scale artificial intelligence workloads and high-performance computing. According to company projections, this expansion could help IREN reach an annualized revenue run rate of roughly $3.7 billion by late 2026, assuming deployment goes according to plan. There was also a leadership development that boosted investor confidence. The company appointed a new chief innovation officer focused on improving liquid cooling efficiency at its Texas data center facilities. Efficient cooling is a critical technology for high-performance AI data centers, so this move signals that IREN is positioning itself for large-scale HPC or high-performance computing operations. Now let's step back and answer a basic question. What exactly does IREN do? IREN, or Iris Energy, is what many investors now describe as a next-generation digital infrastructure company. The business is built around large-scale data centers powered primarily by renewable energy sources. The company currently operates two major business lines. The first is AI cloud services. IREN operates specialized GPU data centers that rent computing power to large technology companies for AI training and machine learning workloads. These data centers host powerful GPUs like Nvidia's H100 chips and the upcoming Blackwell generation. Major cloud and AI companies, including firms like Microsoft, often lease this computing power instead of building their own infrastructure from scratch. The second business line is Bitcoin mining. IREN runs large mining operations that use renewable energy to validate transactions on the Bitcoin network. Unlike some competitors who hold the Bitcoin they mine, IREN typically sells its coins immediately. That strategy provides steady cash flow, which the company then reinvests into expanding its data center and AI infrastructure. This hybrid strategy has helped drive massive stock performance. Over the past year, IREN shares increased approximately 495%, making it one of the strongest performers in the digital infrastructure and AI-related sectors. Next, let's talk about analyst price targets. Wall Street sentiment toward IREN is currently very bullish. The consensus one-year price target is around $80 per share, which would imply roughly 90% upside from today's closing price near $42. Some analysts are even more optimistic. In aggressive growth scenarios, particularly if the new GPU fleet is deployed successfully and demand for AI compute remains strong, certain projections suggest price targets as high as $130 to $136 over the longer term. The key assumption behind those bullish forecasts is that IREN successfully transitions from being seen primarily as a crypto miner to becoming a major AI cloud infrastructure provider. Now let's discuss valuation, because this is where things get more complicated. IREN's valuation is widely debated due to its extremely high growth expectations and the uncertainty around future revenue from AI services. Depending on which analyst model you look at, the forward price-to-earnings ratio ranges dramatically. Some projections show a forward PE around 10 to 11, while others estimate numbers closer to 60 or higher. A few aggressive models even imply triple-digit PE ratios if earnings lag behind infrastructure spending. The reason for that wide range is that analysts disagree about how quickly the AI data center business will scale. On the growth side of the equation, some forecasts expect earnings per share to grow more than 220% over the next year. If that kind of growth materializes, a higher valuation multiple might be justified. However, valuation metrics like price-to-book and price-to-sales ratios are already elevated compared with the company's historical averages, which is why some analysts warn the stock could be pricing in a lot of future success already. So the big question many investors are asking is IREN still a buy? The overall analyst consensus remains a strong buy. The bullish argument is that IREN represents a classic picks and shovels play for the AI boom. Instead of building AI models themselves, the company provides the infrastructure, land, and power required to run those models. That's a valuable position because data center power capacity is becoming one of the most constrained resources in the AI industry. IREN has reportedly secured around 4.5 gigawatts of power capacity, which will become a critical advantage as demand for AI computing continues to explode. However, there is also a bearish view. Some investors argue that the market is still trying to figure out how to value a company that is transitioning from a Bitcoin miner into an AI infrastructure provider. That uncertainty can create significant volatility and risk, especially after such a massive stock run. Finally, let's talk about the key risks investors should consider. The first risk is execution risk. The company's growth projections depend heavily on successfully receiving and deploying thousands of high-end GPUs. Any delays in shipments from Nvidia could significantly slow down the expected revenue ramp. The second risk is shareholder dilution. Building large AI data centers and buying tens of thousands of GPUs costs billions of dollars. To fund this expansion, IREN has periodically issued new shares, which can dilute existing investors and put pressure on the stock price. The third risk is crypto market exposure. Even though the company is pivoting toward AI infrastructure, its business still includes Bitcoin mining. That means major swings in Bitcoin prices can still influence investor sentiment and stock performance. And the final risk is customer concentration. If a large portion of revenue comes from a few major cloud companies, losing or renegotiating those contracts could have a meaningful financial impact. So in summary, IREN is one of the most interesting infrastructure plays emerging from the intersection of AI and digital energy-powered data centers. The stock has delivered extraordinary returns, and many analysts still see substantial upside. But with that potential also comes volatility, execution risk, and valuation uncertainty. As always, investors should do their own research and consider their risk tolerance before making any investment decisions. Thank you so much for watching. If you found this breakdown helpful, please like this video and subscribe to the channel for more stock analysis and market insights. I really appreciate your support, and I'll see you in the next video.